Hello, very good afternoon to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good afternoon to all, and today will be the Thursday, the 27th of February 2025. So, as usual, before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of economic data releases, relevant news flow, as well as the intraday performance of the broad-based cross-asset classes. So let's start with the performance of the major US stock indices first. So as we know that yesterday, the markets in general is waiting for early this morning, 5 a.m. to 6 a.m. Singapore time, the release of NVIDIA earnings. Why NVIDIA important? Because it's the one of the key mega cap stocks that actually contributed to significant gains of the S&P 500 and the Nasdaq 100 in the past 2 years. So what you could see over here is that after close to 3 to 4 days of consecutive decline in the S&P and the Nasdaq 100, yesterday they managed to do a bit of consolidation, but the consolidation was rather lackluster. So what I could see over here is the S&P 500 attempt to open higher, but throughout the end of the US session yesterday, it actually trended downwards. Very similar for the Nasdaq 100 as well. Push up higher at the start of the US session, then thereafter in the middle of the US session, it starts to dwindle downwards as well. So despite the fact that the Nasdaq 100 managed to inch up a slight gain of 0.22%, and the Dow Jones was the worst performer at negative 0.4%. Russell 2000 almost the same as the Nasdaq 100, up by 0.19%. So as we are speaking right now, the Nasdaq 100 futures, which is trading on Globex, is actually down by negative 0.10%, given the fact that market participants do not actually embrace a rosy reaction after NVIDIA earnings result that was released. NVIDIA Q4 earnings result that was released early in Asia session this morning at 6 a.m. Singapore time. So initially there was a bump up over here. So you could see on my screen, this is the after hours trading session of NVIDIA. Right after hours, the one in gray. So I could see there was a wild whipsaw as the earnings got announced. Then thereafter, throughout the end of the press conference, earnings result press conference of NVIDIA, it actually trended down as well. And in the after hours section, it closed in the red by negative 1.49%. And the reason why the after hours result, or the reaction after exposed NVIDIA Q4 earnings result was lackluster with a loss of negative 1.49%. It was the earnings guidance is not that great. Yes, a solid earnings report, both the earnings per share and revenue for Q4 beat expectation, but the forward guidance for this quarter Q1, total revenue will be 43 billion as stated by the senior management during the press conference, and that came in almost online with aggregate analysts that estimated at 42.3 billion, okay, almost online. And there is some projection based on this Bloomberg report ranging as high as 48 billion. All right, so what I could see over here is that the forward guidance is not as high as initially expected by the higher end projection as being crafted out by analysts. More online, I would say, is almost in line with the average 42.23 billion that is being a consensus among the average analyst figure for the next Q1 revenue results of NVIDIA. So that's the explanation why you start to see growth, but future revenue growth and future earnings growth of NVIDIA may start to temper off, and it will not be so solid as been seen in the past 10 or 12 quarters. So that actually explains why NVIDIA lackluster performance after hours at negative 5%, 1.5%. And what's interesting over here is that later I'll share with you all the short-term intraday technical outlook on the Nasdaq 100. There was actually a bang-on bearish reaction right exactly at our short-term pivotal resistance that we highlighted yesterday, ahead of NVIDIA result before it starts to trade downwards. And we will actually more or less be more risk averse to turn neutral on the Dow Jones yesterday. And given the fact that the Dow Jones Industrial Average indeed was the worst performer on the major US among the major US stock indices. So later I'll cover my latest intraday technical outlook on the US Wall Street 30, which is actually representing the Dow Jones Industrial Average. And we also were spot on yesterday's return of dollar strength coming back into the picture, especially the commodities related currency. Now we start to see the Aussie dollar is the weakest among the major currency, where the dollar Aussie. So this chart over here is what I did is as a 5-day short-term rolling performance, able us to see a very short-term minor trend of the FX market, taking into account of the dollar as the base currency. That means $1 equals to how many Aussie, $1 equals to how many Canadian dollar, $1 equals to how many euro, and whatsoever, so on. It's easier for us to actually have this kind of view by using dollar as a base currency. So I could see obviously that the dollar strength started to come back on the short term, which we were more or less within our expectation, where we highlighted the ongoing bearish short-term bias of the Aussie dollar that can't break above a key resistance at 64 figure. For those who follow our daily dose on a daily basis, you should be pretty clear about that, why 64 figure was a key resistance level. And this in mind over here is that it's all related to Canada dollar, because we know that Canada is a commodity proxy, Aussie also a commodity proxy. Kiwi is not really a commodity proxy because the Kiwi has a strong direct correlation with the Aussie. So whatever happened in Aussie potentially could actually have a feedback loop or a significant feedback loop on the Kiwi dollar as well. So that's why we start to see this three pair starts to trade hand in hand very closely, the Aussie, the CAD, and the Kiwi against the US dollar. So the reason why the dollar is so strong against the Canadian dollar is because of Trump's potential, we call it a follow through on his trade tariffs policy, or trade tariffs, 25% trade tariffs on Canada exports heading into the US. And previously at the start of this month, there was a grace period about 1 month. So this cooling off period has ended. And Trump has mentioned yesterday as well that there's high chance that it will lapse, and the 25% tariffs on Canada products may go through on the 4th of March, which is next Tuesday. So that's why the Canada dollar is so weak against the USD, and that actually dragged along the Aussie dollar and the Kiwi dollar as well. And we start to see the rest of the dollar pair also surging upwards as well. The dollar euro, the dollar sterling, and also the previously the underperformer, the dollar yen, has also been rebounding as well. So yes, I'll touch on the short-term intraday technical outlook on the dollar yen. What are the key levels to watch out for today? All right, so this is the FX market, and what we could see is yesterday gold continues to trade sideways, can't break above 2,920, and the West Texas crude oil continues to inch downwards over here. Later I'll touch on also potentially also having still a weak sideway of trading, more of a downward sideways trading drift for West Texas oil. So now let me highlight over here is that what we are going to do is let me share with you guys on this particular cryptocurrency. Let me see. Okay, sorry, the watch list. This watch list over here. So I want to highlight over here is that this right. So what I could see over here is that the Asia stock indices continues to remains in the red for today. All right, so what we could do over here is that now let me share with you one intermarket dynamics more pertaining to the US stock market or the US stock indices that could have a multi-week impact, right, on this market. So let me share with you, it's more of the market breadth situation over here. Okay, where is it? Yeah, this is the market breadth. So this particular chart over here is an intermarket dynamic segment of this. Now I'll be sharing the intermarket analysis on the daily dose segment. All right, so what's interesting over here is that the percentage of Nasdaq 100 stocks above the 20-day average now has been below 50. It continues to trade downwards since the late January. All right, and now it's been trending downwards over here. We could see so now it's at the 48% level. So less than 50% of Nasdaq 100 component stocks is holding above its or their respective 20-day moving average. Very similar for the S&P 500 stock as well. There are actually less than 50% of stocks are holding above their respective 20-day moving average, and now is at 45%. And what you could see over here is that the number of components Nasdaq 100 stocks that are holding above their 50-day moving average also has starts to inch downwards as well. Still holding above 50%, but the amount of magnitude is declining steeply. Okay, from previously a high of 65% that was on middle of February, middle of this month, and all the way now it starts to dip very quickly to 56%. All right, very similar on the Nasdaq S&P 500 as well. Oops, sorry, where is it? Okay, on the S&P 500 as well, it started to actually dwindle downwards, but the fall is not so severe as compared to the Nasdaq 100. So right now it's hovering just above 50%. So now it's at the 52% mark. So what I could see over here is that market breadth, according to the studies of percentage of component stocks holding above their respective 20-day MA and their respective 50-day MA of these two major US stock indices, the S&P 500 and the Nasdaq 100, is not so bullish at this juncture. That means, i.e., there is still this ongoing risk that there could be still further short-term weakness on the major US stock indices, and it could translate into a potential multi-week corrective decline sequence. Right, so this is what I'm trying to explain by sharing with you all this Intermarket analysis dynamic segment using the market breadth analysis on the S&P 500 and the Nasdaq 100. All right, so with that, now let us now straight away jump straight into our short-term intraday technical outlook on the broad-based cross asset classes. So as usual, let me expand my screen so that you guys could have a better view of the charts. So, oops, sorry, I think this should be correct. Yep, this you guys should be able to see the screen right now. Okay, so let us now go through the FX market first over here. So on the FX market, let us touch with the euro dollar. So the euro dollar continues to slide and shape that minor pullback sequence that we highlighted on the start of this week, which is Monday. So since it's now approaching the first support level at 1.045/0440, but it can't break above this level on the downside yet. So there's two key resistance level to watch as we head into the European session, while still maintaining this intraday bearish bias for this potential minor pullback sequence to extend to the downside. So since it can't break, it has not broken below 1.0440. I do not want to tighten the short-term pivotal resistance to be so tight to be at 1.048. So 1.048 will be my first resistance level to watch just in case of any bounce during the start of the European session. But as long as this bounce didn't surpass above 1.0530 short-term pivotal resistance that we have for yesterday, we will still maintain that intraday bearish bias on the euro dollar for this ongoing minor pullback decline sequence to play out. Below 1.0440 exposes the next near-term support level at 1.0360, which is also the 50-day moving average, I think, as a similar support level as well. Only an hourly close above 1.0530 will invalidate today's intraday bearish bias to see the extension of the minor the medium-term mean reversion rebound sequence that is still at play since the low of 13th of January this year. Above it, 1.0530 exposes 1.0565, 1.0565, and 1.06 figure level for the euro dollar. Right, so net overall still maintain that intraday bearish bias for this potential minor pullback decline sequence to play out in the first step, using 1.0530 as my short-term pivotal resistance on the euro dollar for today. So very similar on the sterling dollar as well, where the sterling dollar exactly hit the upper limit of this ongoing bearish ascending wedge configuration, medium term one, because it's more than a month already since the low of 13th of January. So the upper green line is the upper limit of this bearish ascending wedge configuration, which is also our short-term pivotal resistance that we highlighted yesterday as well at 1.2720. So for sure, 1.2720 is indeed a short-term pivotal resistance to maintain that intraday bearish bias for the sterling dollar for today as well, to shape that potential ongoing minor pullback decline sequence. First support level to watch remains unchanged at 1.26 figure level. A breakdown below 1.26 figure level exposes the next near-term support area at 1.2570 slash 1.2540, which is so confluence with the 20-day moving average. And right now, what we could see is there is actually a bearish breakdown on the hourly RSI as we're speaking right now. Okay, indicating the bearish momentum has started to creep back on the shorter term on the sterling dollar. Okay, so with that, only a hourly close and the breakout above 1.2720 short-term pivotal resistance will invalidate today's intraday bearish bias to see a squeeze up towards the next resistance zone at 1.2780 slash 1.2810, which also confluence with the 200-day moving average. So net, given that the RSI has staged a bearish breakdown indicating the potential return of short-term bearish momentum on the sterling dollar, we'll still maintain that intraday bearish bias for today. Key levels remains the same, 1.2720 short-term pivotal resistance level, because the it banked off right it yesterday and shaped that bearish shooting star as well to maintain it to actually maintain that potential ongoing minor pullback decline sequence on the sterling dollar. Okay, so what's up next for the Asia Pacific currency against the dollar? Let's start with the Aussie dollar. So the Aussie dollar plummeted as expected, and right now it has broken finally the 20-day moving average, which is the first, which is the support level that we highlighted yesterday, and that's our first support level as well. So this will become my first resistance level to watch. Okay, for today at 63. So because hourly RSI is now coming very close to the oversold region, so there could be some kind of bounce taking shape during the start of the European session. 63 figure will be my first resistance level to watch. So as long as this bounce didn't surpass above my Titan short-term pivotal resistance I have for today, 63.30, we will still maintain that intraday bearish bias on the Aussie dollar. Next near-term support level to watch will be 62.70. 50-day moving average as well. Breakdown below it exposes 62.40. All right, pardon me, 62.70 in the first step, followed by 62.40. However, if the price action starts to break out and the rebound is much more pronounced, and the hourly close and the breakout above the Titan short-term pivotal resistance at 63.30, today's intraday bearish bias will be invalidated to see a squeeze up to revisit 63.55 in first step. Above it, sees the key resistance level coming in at the 64 figure level again. Right, so that's for the Aussie dollar, still maintaining the intraday bearish bias, but nevertheless, there could be some signs of a bounce taking shape during the European session. As explained, the hourly RSI is coming close to the oversold region. As long as this bounce didn't surpass our Titan key short-term pivotal resistance at 63.30, we will still maintain that intraday bearish bias on the Aussie dollar. All right, so lastly will be the dollar yen. So the dollar yen continues to remains on support as expected by our predefined 14880/70 short-term pivotal support level, and also the lower limit of this medium-term descending channel from the high of 10th of January. So what you could see over here is that it still continues to hold at this 4880/70 short-term pivotal support level that we have yesterday. So no change, because it can't surpass our first resistance level at 49.90, because it hit 49.90 before retesting, and in today's Asia session it started to bounce again, and with the hourly RSI now continues to shape a series of higher low. All right, as you could see on my chart over here. So with that, we will still continue to maintain this intraday bullish bias for this potential mean reversion rebound sequence to play out within this medium term descending channel. That means i.e. back to into at least the 50% mark of this medium term descending channel. No change on the key levels for today. First resistance 49.90, a breakout above it sees the next intermediate resistance coming in at 150.70/150.95. Only an hourly close and a breakdown below 148.70 will invalidate today's bullish bias for that mean reversion rebound scenario to revert it back towards the impulsive down move sequence, exposing the next near-term support level at 147.95, followed by 147.10/146.90. All right, so that's for the dollar yen. Now, that's also sum up the intraday technical outlook on the FX market. So with that, let us now focus on the stock indices, the major stock indices, starting with the Hong Kong 33, representing the Hang Seng Index. So the Hang Seng Index continues to inch up higher, so hit our first resistance level before shaping a minor pullback as we are speaking right now. So far, there is no clear exhaustion on the hourly RSI, we could see over here. So what we could see is that we will tighten my key short-term pivotal support level to be at 23,220 for today, 23,220, which is also confluence with the former minor swing high of 25th of February, the lower limit of this steeper minor ascending channel that I drew from the low of 3rd of February, right over here. So with a still maintain the intraday bullish bias on the Hong Kong 33 using 23,220 as my short-term pivotal support level. Next resistance level to watch will be at 24,190/24,510. Only a hourly close below 23,220 may invalidate today's intraday bullish bias to kickstart a minor pullback decline sequence, exposing the next near-term support level at 22,900/760, followed by 22,470 next. Right, so that's for the Hong Kong 33, still maintaining that intraday bullish bias using a tightened key short-term pivotal support for today at 23,220. Now, for the Nikkei 225, so the Nikkei 225 continues to churn. So yesterday it did a vicious churning over here again. So what we could do over here is that to me, seems to me that in the last few days it has been going nowhere in terms of trend. So with that, I will rather have a neutrality stance for today. All right, because I don't want to put a pivotal levels in between such kind of vicious trend and we get hit whipsaw out unnecessary. So neutral for today between 38,490 and the lower limit is this Wednesday push up or yesterday push up at 37,730. All right, so I'll be neutral between these two levels, 38,490 and 37,730 for today, right? Because of this vicious choppy movement, I don't put any level in between 38,490 and 37,730. So unless we could start to see a breakout above 38,490, then potentially the Japan 225 price action may do a bit of what I call a mean reversion rebound scenario, exposing the next near-term resistance next at 38,800, followed by 39,045, which is a confluence with the 20-day moving average and closely the 50-day moving average as well. So that's for the Japan 225, very choppy price action for now. Onward next will be the German DAX or the German 30. So the German 30 continues to inch up higher, clear our first resistance level at the 22,640. So right now there's a retest of it. So given that it has really cleared above our first resistance at 22,600 level, I would tighten today's short-term pivotal support level to 22,400, which is also the congestion area of 25th of February, and as well as the lower limit. Or you could see here the lower limit of this minor ascending channel that I drew from the low of 3rd of February. So still maintaining the intraday bullish bias for this ongoing impulsive upmove sequence to be continue with a tightened key short-term pivotal support for today at 22,400, first resistance zone to watch out for next will be at the current all-time high area at 22,930/23,050. A breakout above it may seize the next resistance to come in at 23,300, which is the upper limit of this minor ascending channel and the one-time Fibo extension as well. All right. However, if price action starts to this one-time Fibo extension is taken from the low of the 20th of December. All right. However, if price action starts to break down with an hourly close below 22,400 level, short-term pivotal support, today's intraday bullish bias will be invalidated to kickstart a minor pullback decline sequence, revisiting 22,130, which is also corresponding with the rising 20-day moving average. Only a breakdown below 22,130 today may trigger a deeper minor pullback sequence to expose the next near-term support level at 21,690/540. So net in a nutshell, RSI still remains positive, holding above the 50 level and still bouncing off from this parallel ascending trendline support that I drew. We will still maintain that intraday bullish bias on the German 30 for today, but with a tightened key short-term pivotal support at 22,400. All right, so let us move on to the US stock indices, starting with the US Wall Street 30, which is the representing the Dow Jones Industrial Average. So yesterday we do highlight neutrality stance between 43,730 and 43,380. What we could see over here is that the RSI has started to shape a bearish condition by breaking down below a parallel ascending trendline support. So what we do over here is that we will flip to a intraday bearish bias for today, given the bearish condition that's being flashed out on the hourly RSI. So no change, still using the 50-day moving average as my pivotal resistance zone for today. 43,000 okay, why is it flashing out this side? Okay, 43,730/840, breakdown below 43,380 exposes the next near-term support area at 43,120/42,980, which is also the 1.618 Fibo extension on the downside that I drew from the high of 31st of January. However, if the price action starts to shape a push up and clear up with hourly close above 43,840, that would invalidate today's intraday bearish bias to kickstart a mean reversion rebound scenario, exposing the next near-term resistance level at 44,190, which will correspond very closely soon with the downward sloping 20-day moving average. Okay, so that's for the US Wall Street 30. So lastly will be the Nasdaq 100. So the Nasdaq 100 reacted off exactly at the 21,400 short-term pivotal resistance level, bounce, hit our first support level, and just traded sideways, expose Nvidia earnings. All right, so right now still no change. For sure 21,400 will still be my short-term pivotal resistance level. Still maintain that intraday bearish bias for the Nasdaq 100. So first support level to watch out for today will be at 21,030 for sure. A breakdown below it may see the next near-term support area to come in at 20,910/20,790, which is the minor swing low area of 27th of January, 3rd of February, and as well as the 3.618 Fibo extension on the downside, taken from the high of the 20th of February, which is the all-time high as well. Right. However, a push up in hourly close above 21,400 will invalidate today's bearish bias on the Nasdaq 100 to see a squeeze up or a mean reversion rebound taking shape, exposing the next near-term resistance level at 21,570, followed by 21,740, which is so confluence with the 50-day and the 20-day moving average, acting as similar resistance level as well. So i.e. still maintaining that intraday bearish bias using 21,400 as my short-term pivotal resistance on the Nasdaq 100. Right, so that sum up the intraday technical outlook on the major stock indices. So let us now turn our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, still pretty much bearish. It can't break above our first resistance at 2,930, which we highlighted earlier. So because it's still holding above our first support level, which is so close to the 20-day moving average. So that's our bearish bias short-term support level, first level to watch. So still no change, still maintaining that intraday bearish bias for this potential minor corrective decline sequence in first step to play out, unless we could have a breakdown between 2880, then I could tighten my key short-term pivotal resistance level to 2930 for today. So for now, level still remains the same. First resistance level to watch 2930. The short-term pivotal resistance will be at the all-time high area 2954. A breakdown below 2880 exposes the next near-term support level at 2845. But however, during the US session or the later part of the European session, if 2845 doesn't hold and it starts to shape a steeper fall itself over here, the next support level to look out for on a near-term basis will be this level here. Okay, 2810. Okay, this congestion area here, 2810. And if you were to do the Fibo retracement of this entire rally from the low of 19th of December all the way up to the current all-time high area. Okay, that's confluence with the 38.2% Fibo retracement. All right, so let me put it in writing. 2810. Right. So, but however, if price action starts to reverse and break out above 2,954 and the hourly close above it, the impulsive up move sequence will resume, and to see the next resistance coming in at 2,990/3000 next. Right. So, i.e., in a nutshell, the gold XAU/USD current price action is still bearish on the intraday basis, potentially unfolding a minor corrective decline sequence within its medium-term uptrend that is still intact. First two support level to watch 2880 followed by 2845. If 2845 gives way, potentially we may see 2810 coming in next. Right, so that's for gold XAU/USD. So onwards next, lastly will be the West Texas crude oil. So the West Texas crude oil yesterday continues to came down, hit our first support and start to trade sideways thereafter. So with that, I don't want to tighten my short-term pivotal support to be so tight to yesterday's European session high at 6950. So 6950 will be my first resistance level to watch. So right now the RSI is now trying to exit from the oversold region over here, so there could be some sign of bounce taking shape again today during the European session. Potentially, as long as this bounce didn't surpass the short-term pivotal resistance that we have for yesterday, 70.40, we'll still maintain the intraday bearish bias. Next support level to watch after 68.80 will be 67.96. So 67.96 is the minor swing low area of 10th of December. Only an hourly close and a breakout above 70.40 will invalidate today's intraday bearish bias to kickstart a more pronounced mean reversion rebound sequence on the intraday basis. Potentially see a squeeze up towards the next near-term resistance level at 71.35. Above 71.35, potentially see 72.10 next, which will correspond to the downward sloping 20-day moving average. So i.e., in a nutshell, given that the RSI now has really exit from the oversold region, potentially there could be some signs of a minor bounce taking shape. So as long as this minor bounce didn't surpass above 70.40 short-term pivotal resistance on the West Texas oil, we'll still maintain that intraday bearish bias for it. All right, so that is all sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the calendar. What are the key data to look out for today? So today will be Thursday over here. So over at Thursday, key data to look out for during the European session that come out over here is pretty much quiet, I would say, with the exception of this economic sentiment index for the broad-based Eurozone that will be out at 6 p.m. Singapore time, 6 p.m. Singapore time. Then thereafter, what we could see over here is that in US, 9:30 p.m. Singapore time, this is more second tier, I would say, is the second estimate of Q4 GDP growth rate. More or less, the second estimate will not have so much impact as compared to the first estimate over here. Then what we could have also second tier job data, which is a weekly continuous jobless claim data over here. So that will be out at 9:30 p.m. Singapore time. All right, and at 11 p.m. we have a Federal Reserve official speaking, Fed bar. He was speaking at 11 p.m. Singapore time. Then thereafter, pretty much of a quiet session, and 12:45 a.m. another Federal Reserve official speaking, Fed Bowman at 12:45 a.m. and followed by two more Fed officials speaking over here at 2:15 a.m. Fed Hammock and 4:15 a.m. Fed Harker. And one thing I want to highlight more importantly is more pertaining to the dollar yen and the yen crosses. We have a leading inflation data out from Japan early tomorrow Asia session at 7:30 a.m., which is the Tokyo core CPI data, where market is expecting a further uptick of it, and also market will be paying close attention to other Tier 1 economic growth proxy data of Japan at 7:50 a.m., industrial production, and as well as retail sales. All right, that could potentially influence the movement of the dollar yen and the yen crosses, and also potentially the Japan 225, i.e. the Nikkei 225 index as well. All right, so with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off, and we shall speak again tomorrow. Thank you.